Hi everybody. So I'm talking about the New Zealand dollar, US dollar today. This is a pair that I think has a lot of potential for the downturn in the coming weeks and months. And if you look at it on the daily chart, you can see a diamond pattern forming here. And you can see also a pretty clear, what looks like a head and shoulders pattern here with a very clear head and shoulders. And that's probably not going to be of any significance unless it does break below this important support line that looks like 78 is the important support line. Right now it's in a consolidation pattern. And the New Zealand dollar US dollar pair moves in pretty close tandem to the Australian dollar US dollar pair. They have important similarities in their patterns, in the trading patterns, of course, because they're both US dollar pairs. And you can see that there's kind of a head and shoulders here on the Australian dollar. They've also both made these big moves up since March of this year, and they've also been in big uptrends for really over a year. But it looks like right now there might be some cracks in this upward trend, and there might be more opportunity on the short side with both of these pairs. But I think the New Zealand dollar probably offers a little bit more opportunity here because New Zealand is really a much smaller economy. People don't realize how small it is, but the economy is only in total around $138 billion GDP, and there's only 4.5 million people living there compared to over 30 million living in Australia. So as a very small economy, they're going to be a lot more prone to the downfall from these cyclical downturns and the fallout from rising interest rates in Europe, and the rumors about countries like Greece having increasing problems with rising interest rates for their sovereign debt. So that's going to affect a country like New Zealand because they're a very small country basically. And you've also got a couple of bearish crosses that I've been watching. This looks like it's really in more of a downward trend than the Australian dollar. And you've also got it sandwiched between its 50-day moving average and its 200-day moving average when you look at it on a 4-hour chart. And of course, for both of these currencies, you have to pay close attention to the stock market. And the Dow looks like, well, it looks like it's probably technically still in an upward trend, but it's going to have to clear this high point of 12,876. and go above 13,000 for the trend to continue. And with the end of the quantitative easing by the Fed, that's going to be a real challenge. I mean, there's been $600 billion of liquidity poured into these markets over the last 6 months, and that's going to end in the summer. So it may be ending this week, it may be ending in June. So when that ends, there's going to be a lot less support for the stock markets. It's going to be very hard for it to continue this upward trend, and it's just due for a technical, 10 to 20% correction, which could be healthy before the next upward move. And it's also important to pay attention to what a lot of people have been talking about, which is a potential housing bubble in Australia, and not so much in New Zealand, but of course Australia is New Zealand's biggest trading partner. So if there's a big housing bubble in Australia and the prices start to go down, that's going to affect New Zealand as well. Well, if you do a Google search and you go to Google and do Australian housing bubble 2011, you're going to come up with a lot of horror stories, because there are a lot of analysts out there who think that the rise in housing prices in Australia mimics that which happened in the US from the 2000 to 2008 period, and it's going to cause even more of a cyclical crash, which that really isn't very likely, because as I understand it, these are mortgages that are not repackaged into complex, opaque derivatives. But nonetheless, you still had a huge boom in housing prices in Australia. And the housing prices in Australia is the most expensive housing market in the English-speaking world. So, and the average housing price is about 10 times the average income, which is very high. And mortgage debt in Australia has risen 700% compared to GDP in the last 2 decades. And it's also, mortgage debt to GDP in Australia is very high. The real estate loans as a percentage of total bank assets are over 37%. So you did have an incredible boom. And some of it was obviously justified because the Australia has had an incredible mining boom. The per capita GDP has risen. It's a very desirable place to live right now. But nonetheless, you're always going to have some cyclical downturns, and it looks like the prices are beginning to start to go down. You saw in the March quarter, you did see the housing prices, the weighted average of the 8 capital cities dropped 1.7%. So you're starting to see a downturn in that. Maybe it may have something to do with the Chinese rate hikes. But nonetheless, if you had a big drop in the prices of housing there, 10% or more, it's going to have a big effect on both of these currencies. So what you've got here is a diamond pattern on the New Zealand dollar pair. And the diamond pattern is right here. You can see that. And if you see the time period at which it's supposed to break out, it really should break out before right here, which is really towards the end of this week. So with the diamond, you're always going to watch and see where it breaks out first. And since it does look like it made a temporary top around 81, you want to wait and see. If it breaks out below here, I'm inclined to think it would probably be a pretty good short, depending on what else is going on in the market. And you also had the RBNZ come out with a pretty dovish statement the last time. They made it pretty clear that they're not going to be raising rates in New Zealand probably for the rest of this year. So that's in contrast to the Australian Reserve Bank of Australia, which may very well said that they may be raising rates to combat inflation, but some analysts have said that they'll raise rates to slow down the housing bubble, but they really, it looks like at this point, the horse has already escaped and they're shutting the barn door afterwards, so it's kind of too late for that. But at any rate, I like the New Zealand dollar on a spike up here to the around 79.20. I think that would be a pretty good short going forward into the coming weeks.